Okay, so in this video, I'm going to discuss the audit process. Okay, so during an audit process, you have these records, financial records, and normally the auditor would ask for them. Okay, so you have to provide the completed records to the auditor. Okay, for big companies, an auditor would do sampling. Okay, in sampling, of course, the auditor would visit the organization, the church, and then they would ask for the what do you call it? Source documents. Okay, the source documents would be the official receipts, booklets for the receipts, and then for the disbursements, it would be the voucher records. Okay, or the what do you call it? Voucher. We call it voucher. Okay. So the vouchers and the official receipts are normally the ones being used. Okay. For big companies, auditors would do sampling. Okay, random sampling. Essentially, what they do is they would pick up an official receipt booklet. They would open it, and then let's say they open the official receipt on OR number 251. So on the records, they would look for OR 251, and then they would check if the information encoded on the records is the same as the source document. Okay. For sampling, it would depend on the volume of the transactions of the organization. The bigger the company, of course, the bigger the number of the samples. Okay, let's say the sample is 5% of the whole, uh, of all the records, or let's say, I'm not sure. I think there is a specific computation for that. Okay, but essentially for big companies, they would not check every single one of the records. Okay, they would do sampling just to make sure that, um, let's say during the sampling, all the ORs that they checked are properly recorded. So in that case, they can safely assume that all the others were recorded properly as well. Okay. For big companies, let's say normally they issue like thousands of ORs. So checking them one by one is not going to be efficient. So they can only really do random sampling. Okay. But for small organizations, which don't have that much transactions, okay, let's say, I'm not sure if GBC would fall under it. I think GBC is already medium size, but anyway, the transactions I think would not go over 1,000, so it's still doable. Okay, so you can check one by one for it, but sampling is already unacceptable in the audit procedures. Okay, let's say during the audit random sampling, they notice that as one or few of the documents that they checked, there were errors in the recording. So, that would cast doubt on the accuracy and on the accuracy of the record. So, in that case, they would increase the number of samples. Okay, they would check more. Okay, if they originally planned to check 1,000, sorry, if they originally planned to check 100 official receipts, upon seeing that some of them will have errors, then they can increase it to say, okay, now let's check 150 official receipts. Okay, so for the completeness check would be all the ORs that were checked were recorded. Now, if a particular OR is missing on the record, so that would cast doubt on the completeness of the record. So again, what they normally do is that they simply increase the sample. Okay, and from the results of that, they can infer, how much margin of error should we, use in the audit, or in what do you call it? What would be the acceptable margin of error so that we can issue unqualified opinion. Okay. So that's in the completeness. Have to make sure that every OR that were sampled are in the records. And then for the accuracy, the information from the source documents are the same as what has been recorded on uh, the records, right? So essentially, those are the two tests, okay? And then for the disbursements, it will be the same. So for the vouchers, another thing that they check for the vouchers is the supporting documents, okay? Disbursement. So they have to make sure that the disbursements were properly liquidated, and then the liquidating documents or supporting documents are official receipts. Okay, again, when you buy from another legally registered business, of course, they would issue you with the official receipts. But then again, there are times that any person and organization would have to, buy something from an unregistered vendor. So in that case, there's an acceptable limit to that. Okay. As much as possible, we are encouraged to, buy goods and services from registered individuals or registered businesses. Okay. Because in that since the government is assured that the corresponding taxes are at least filed and paid with the BIR. But again, it could not be totally eliminated. Okay, so you might see presences of just torn piece of paper for signifying the receipts or that the money was received by a certain vendor or certain people. Okay, again, that's acceptable to a certain amount, okay? And I think the limit is around 20% of the total disbursements of the company. Okay, as much as possible, again, all disbursements must be supported by official receipts. Okay, so there is that. If it, if an auditor notices that the organization has too much unofficial receipts, then it would be kind of questionable, and the auditor would suggest to the organization to please try to purchase your needs from official businesses or registered businesses. Okay, and then auditors also check for consistency. Okay, one thing, for official receipts, again, this must be properly numbered, so they do check if they are properly numbered. And then for the voucher number, the same. For the check, it's the same. So let's say the bookkeeper preparing the voucher and the checks made a mistake, so they canceled voucher number 3311. So although the what do you call it? Although it was a mistake, it was an honest mistake. Uh, the voucher number must still appear on the records, and then you simply put canceled on it. Okay, so let's say the voucher was canceled due to a mistake, so the voucher number must still appear, and then you just put canceled on it. Okay, and in that case, if it's canceled, then there's no amount that would appear on the cash in bank and on the respective um, accounts affected. Okay, because it's canceled, that shouldn't affect the respective accounts. Okay, it's the same with official receipts. If you committed a mistake in issuing a receipt, let's say wrong information was written, then you can, just cancel the receipt and then issue another. Okay, in that sense, if you notice in official receipt, there's the original given to the customer, and then there's the duplicate being kept by the issuer or by the organization. If a certain official receipt is canceled, then the original must be with the organization or with the company. Okay, it shouldn't be given to the customer because it's canceled, right? If it's canceled, the original must be on the booklet. Okay, If it's properly issued, then the original is with the customer, and then the duplicate is with the company. Okay. Okay. So after checking the consistency of the ORs, the chronological orders of this, completeness, okay, no missing, serial number, even canceled ones are shown as canceled. Okay. Another thing we check for is what do you call it? Consistency. If a certain account happens regularly, let's say the utilities, on a weekly basis, we have receipts of tithes, offerings, etc. So if it's, we do notice a certain range. If it's within that range, the amount is within that range, then it's acceptable. But if the amount goes beyond what we noticed was, the usual amount for the particular account, then we tend to ask the management, why is it that on this particular date, on this particular transaction, you received more than usual? Okay, so of course, if the church can explain, let's say, oh, we had a guest who gave a certain amount of money during that particular day. So, yeah, it's all good when there's an explanation. And the explanation is realistic and acceptable. Okay, then there's no problem with that. But if, the explanation is kind of suspicious, then we might have to what do you call it? We might have to demand for a confirmation. Okay, it's either we ask the church to hunt down that particular person, and either you let the auditor talk with them so that you can confirm, did you really give this particular amount? Okay, or maybe just paper confirmation. That's also good if the person doesn't want to be known as a donor or whatever. So there are, those types of confirmations, reconciliations, or we can also check a particular OR showing that particular excessive donation. Okay. And then again, uh, so that's a process. Consistency, if something is not consistent with the usual, we try to get explanation. If the explanation is not believable, then we check the documents themselves, either the OR, the vouchers, okay. And then if it's possible to confirm it with a third party, a client or a supplier, then we'd also do that, okay. But we don't normally do those things. It's only when there's something suspicious or unbelievable, or not really unbelievable, but suspicious, if there's anything suspicious only. Okay, so there is that. Again, on the part of the organization or the management, as long as you're able to properly explain, there's nothing to be afraid of. Okay, you can properly discuss with the auditor. The auditor is not your enemy. They are there to help you find out if there are any errors, if there are any fraudulent activities. If there are, can discuss them in a calm manner. Okay. And of course, although that's an external auditor, the church, availing of the external audit service, you'd be paying them the professional fee. So don't need to be intimidated by them. Okay. Be able to, properly explain the transactions. Okay, the auditor would then prepare the statement of activities. Essentially, it's a summary of the receipts and then the disbursements. The disbursements would be, there are two types here. This one is from the funds, the building, the vehicle, and then the other one is the operating or from the general fund. Okay. Then you have your interest and bank deposits. You have the tax on the interest. Okay. Essentially, that's what these are the information that appears on the statement of activities. Another term for it is a statement of receipts and disbursements. Okay. And then you have your financial position. In the financial position, you only have the assets in summarized, and then the liabilities and equity. Okay. Assets, any cash or non-cash property owned by the church, they would appear here. Current, if they're used in the normal operations or regular operations of the business, or anything that is consumable within 1 year. And then you have your non-current assets, anything that can be used by the church for more than 1 year. Okay. Then you have your liabilities, borrowings or loans, and then you have the equity, the savings of the church. Okay. Then this is also called the balance sheet because the total assets must be equal to the total of the liabilities and equity. Okay. So this can be prepared by the management, but if they don't, then it's also fine. The auditor can prepare them quite easily. And then aside from these two, there's also the statement of changes in equity and then statement of cash flows, but I did not have them here. Um, it's a bit complicated. But anyway, the auditor can prepare them for you. Okay. Budget variance. This one is an internal document, internal financial record that can be used by the church just to see, essentially, you're keeping track of the actual expenses of the church during the year, and then you have your budget, which is something you prepare at the beginning of the year, and then you take note of the difference between the actual and the budgeted. Essentially, you're trying to see if you haven't gone over the budget yet. Okay, or if you still have a leeway to spend this much money on this particular items: ministry, mission, building. Okay, depreciation is non-cash, but again, you just put it there to remind you, okay, that you have to accumulate a certain amount of money so that you can buy a replacement when the property, plant, or equipment eventually deteriorates and become unusable. Okay. Then for the operating expenses, you have these. Honoraria represents the salaries and wages of the church workers. You have the mandatory benefits, utilities, clothing and uniform, if the management decides to give them to their workers. Computer internet expense. Again, this is from GBC, but you can tailor this whatever's needed by your particular church or the mission. Okay, whatever is applicable. So you can change these expenses. Okay, whatever is applicable. And then you have the funds. Normally, you want, if you have what do you call it, multiple funds within the church, then you would want to see the particular balances of each fund. Okay, and then you have the total cash fund. This must be equal to the cash balance that you have here. Okay, at the end of the year. And then the distribution, how much of the total cash is for the general fund, for the building, for the mission, for the vehicle. Okay, so that you don't have confusion. You don't use the building fund for the operations. Okay, that's what you're trying to avoid for monitoring the balances of the funds. Okay, then the cash recon, not maybe later if we still have time. I'm going to show you how to do cash reconciliation. Okay. But again, for church, it's simple operation, so might not be very complicated for church. Okay. All right, so that's that for the audit. If you have questions, you can just raise them in the GC or in the comment section. Okay. I'm going to end this here, and then we'll have one last video for the other financial services that can be availed from a CPA or an accounting firm. Okay.